Hello and welcome to this end of year review for Conservative ETF Investor. I am your host. My name is Ken, Senior Market Analyst for Conservative ETF Investor. How did we do in calendar year 2024? I am very happy to say that our model portfolio for SPY, which is the S&P 500, is up 37.29%. So we absolutely smoked the buy and hold investor for calendar year 2024. This is me, Ken Cogliano, and we currently do have a red for the stock market strength color signal. I go through the full video at the end of each week on the weekends. So this is just a shortened end of year video where I'm going to kind of go through the year a little bit for a review, and then show you a little bit about my website. I want you to follow me in order to beat the market, beat the returns of the buy and hold investor for the S&P 500. Okay, today's video content is going to be the end of year review for 2024. We're going to review last week's trades, and we're going to look at the model SPY portfolio equity curve compared against the benchmark of the S&P 500. And we're also going to review of Conservative ETF Investor website. Let's get to it. Okay, last week, which of course is just the current week because on the end of trading ended on a Tuesday. So it's just Monday and Tuesday of the current week. There were no trades sent out because the market is pulling back right now. So the last trade that we did send out was on December 26, 2024. And that trade that was sent out to our subscribers was in the SPY model portfolio. We want to sell all shares of SPY and we want to sit in cash for now. So we're going to sell all. We had 200 shares at that time in the market, and we're going to sell it at the market, which is currently it was trading at that time at about $600 per share. All right, this chart here is a 10-day candlestick chart for the S&P 500, and we use the ETF SPY for a lot of the charts when we're trying to represent the S&P 500. Okay, now here we are on Tuesday, December 31st. Trading is over, so the year for 2024 is over. Now the last trade that we did put on was the 26th, which is this candlestick right here, and we happened to catch it pretty good. We caught it at the just about the overall high, except for this little peak right there that we missed out on before we ended up selling in cash. Anyway, so we did really good on that sell signal, and the market's been pulling back ever since. All right, here are some of the trades that we've made in 2024. If you want to see all my trades going back for the last 3 years, you can head over to my website. There'll be a link for it down in the description down below. Also, if you'd like to sign up for real-time trade alerts, you can go ahead and click on that link and it will take you there, and you can choose which plan you'd like to participate in. Anyways, you can see here, so in this year, 2024, we started the year off with $100,000. We traded our way through the year, and at the end of the year, came up with a nice profitable gain of the gain was $37,287 or 37.29%. We are very happy with those returns, considering that the S&P 500 buy and hold investor, their returns was just over 24%. So we beat the returns of the buy and hold investor by about 14% for the entire year, which we are extremely happy with. If you want to see how I do this, and then we are now starting the year 2025, I want you to go ahead and smash that like button down, subscribe to my channel, and ring that bell to be notified when I post a new video. All right, here is our equity curve for the model portfolio in blue against the buy and hold investor in pink. Now, in the beginning of the year, I clearly recognize and acknowledge I was way too conservative in the way that I was trading the portfolio. I didn't lose money, but I didn't make money either, while the S&P 500 buy and hold investor, their portfolio took off. they had a pretty good sized correction, which obviously you can see I did not participate in. And then we both took off together and we were doing okay, but I was still lagging behind the buy and hold investor. And I did that all the way up until August. In August, that is when I surpassed the buy and hold investor, and then I never looked back. The portfolio has been beating them ever since then. And then as of late, where I was able to capture the market downturn, not participate in that, I was able to get some returns going the other way, and hence the end of year returns 37.29% for us in our model portfolio, compared to the buy and hold 23.30%. So we're ecstatic with those returns. All right, this here is a 1-year weekly chart for the S&P 500, and these are candlesticks, weekly candlesticks. Basically, what we're trying to do here is we're trying to participate when the market goes up. Then when we start to see that plateau taking place, take defensive postures in our portfolio. There's several ways that we can do this. We can do this by just cashing out, going to cash. We can buy in the money covered calls. We can buy straight out puts. And as the market comes down, profit from those. But you got to get your timing dead on when you do that. And that's very difficult to do in a bull market. But anyways, you can go back and look at my trading history for 2024, and you can see exactly how we did it. But when you look at this chart, and it's nice to look at this on a 1-year review, so we can kind of see, ideally we want to be long here. We'd like to be short here, long here, short here, long here, and then short here. That would be if you had a crystal ball and if you could do this all perfectly and you knew exactly what the chart was going to look like, that's how you would trade this chart pattern. Now, here we are just getting ready to begin 2025. We have a completely blank slate. We have no idea what the market is going to do to us in 2025. So we have to trade the market as we see as the information unfolds itself throughout the year will determine how we position our portfolio. And that's basically what we need to do. All right, just to do a little bit of a deeper dive into the current market. This is a daily candlestick chart with a 6-month time duration for the S&P 500. Now, the candlesticks is the S&P 500. I've got some trend lines drawn in here. That's a valid trend line. Taking this cycle low to there, this cycle low to there. This trend line doesn't include it, but this cycle low is right there. And this cycle low here, I'm thinking is that one. Now, if that is true, that means that this is a high and this is a lower high. And if this is the cycle low, this is the beginning of the cycle like that. And if this is the beginning of the cycle and we came up, we did not make a new high and we started to come down, this is going to be classified as a lower low until it's taken out. And we need to now see if this low here, the current low where we're trading right now, is going to be lower than that low. Let me clean this up. If this low now is lower than the previous low, which I'm thinking is this cycle low right here, then we're going to start establishing lower highs and lower lows. If indeed that is going to happen, this momentum of this market is right now changing from higher highs and higher lows to lower highs and lower lows. So our dynamic, the way that we trade has to shift. You can no longer buy the dips and sell the rips, so to speak. We need to change that strategy where we want to wait for the market to come up to a peak and we want to put on shorts because the market looks more negative than positive or more bearish than bullish. So we're right now at the precipice of a transitionary period for the market, if that's going to happen. We have not established the lower low yet. So let's see what the next week of trading, or at least the next few days of trading, are going to reveal. Now, what else do you got going on? You got the MACD down here below its signal line. You'll notice the distance between the MACD and the signal line is increasing. It's heading south. You'll notice the bars in the histogram are increasing. This is all negative. The slow stochastics is already below its signal line, below the 50% mark, and definitely looks like it's traveling to below 20. So it looks like we have some more negative days for the market in the short term. And if that's true, that's going to take us from our current trading action to somewhere over here. That's going to establish a lower low. So that's not going to be good for the next market cycle, because the market is transitioning from a bull market to more bearish activity. So we definitely got to monitor that and trade accordingly. As you know, the portfolio is currently in cash. So we did not, as of the 26th, we put our portfolio in cash. So looking at it on this chart, this is the day that we cashed out. And by the way, you see that trend line right there, that resistance line? I drew that in after that top was established. I drew that top in right there. And then the next 3 trading days have been negative days, and we didn't participate in that. We just sat in cash while the market dropped down a few percentage points. The market is still high, I mean, considering that where we're at. Now, you'll see this red line that I've got drawn in here. Well, that is taken, so I've got a wedge pattern. See this support line here and this resistance line here? So if you draw that out and you have a rising wedge pattern, and I took the highest point to the lowest point in the rising wedge pattern, which is this red line, I carried that over to here to give us a potential of how much this market could drop. Now, the market almost came to this point, which is about 588. The market came over to here, and it looks like it came to 581. Excuse me. This lower number is 578, and this number here is 581. It's only three points, not a big difference. So we essentially came down this distance, the distance that I had identified here already. So it's very possible that this market isn't going to go any lower. We're going to find support in here. Now I've got some support lines drawn in. I've got the first support here, second support here, and third support here. It's possible that this first support line here is going to hold, and we're not going to breach, or we'll just breach it intraday or for 1 calendar day or 2 calendar days. In other words, a short period of time. The more time that you spend below these lines, the more bearish the activity is for trying to get above those lines. So the amount of time that you spend in the neighborhood, so to speak, is going to dictate where your stock or your position is going to be, or where it feels the most comfortable being, I want to say. So we need to see, right now we're in cash. We are looking for a buying opportunity. If that's going to present itself, when that's going to present itself, how that's going to present itself, we need to see that. I would absolutely like to see, at a minimum, the slow stochastics go above its signal line. That's going to, the thing that will make that happen is that the S&P 500 is going to stop going down and it's going to start going up. So right now, you know what I don't want to do? I don't want to catch a falling knife. That's why we're sitting and waiting patiently for the market to change its trajectory. Okay, so here we are on the Conservative ETF Investors homepage. And if you scroll down here from the whole homepage, you can also have a contact us. So if you want to send me an email, go ahead and fill this out right here, hit send. It will go ahead and send right off to me. Now, when you look at portfolio on the next tab, this is for 2024. Told you about our portfolio being up 37.29%. Normally I would have a little bit more in here about the portfolio, but this is just an end of year snapshot of how we did in 2024. Now on the members trade page, only members who have signed up will have access to this, but once you do sign up and you're granted access to this, this is what you're going to get for 2025. Now in 2025, we're going to do 4 portfolios. We're going to do the SPY for the S&P 500, QQQ or cubes for the NASDAQ 100, IWM for the small caps, and we're going to have a small account with starting value of, well, I'll tell you right now, on the small account, we're going to start out at $3,450. And on this particular account, anything goes. I can buy or sell any product that is available on the Charles Schwab website trading platform that I would like to put into this small trading account. Basically, the goal is just going to be to try to build it as much as possible in 2025. Now, when it comes to the other portfolios, as an example, the SPY portfolio, the only thing that we're going to be dealing with here is SPY. And we're going to be either buying SPY shares or we're going to be doing options, and that's both calls and puts. We can buy them or sell them. We can do anything we want with options, but only related to SPY. And that's going to be the same for the NASDAQ 100 portfolio, as well as the IWM small cap portfolio. Again, you're only going to have access to this if you become a member. In order to become a member, you can come over here and click on the pricing plans. There are 2 options. The silver membership, which is basically $25 every month, or the gold membership, $250 for a 1-year subscription, which of course that's going to be the best value. If you would not like to purchase a plan, but you would like to support the channel, you can go ahead and be a patron and go ahead and give a one-time channel support donation of $25 when you go through this process right here. Basically, you're going to contact us, tell me which plan you want to participate in. I'll email you off a PayPal link where you could use your credit card to make the transaction on the plan that you would like to purchase. Okay. Now, keep in mind that if you do the Patreon, that's not going to give you access to the members trade page. Members are only the silver membership and the gold membership. Now, when you come over here to the trades tab, this here is going to be the trading history. Now, in the past, all I was doing, and all that I'm really going to promote for the general audience, unpaid subscribers, is just going to be the SPY portfolio. And here is the SPY portfolio going back for the last 3 years. Now, in 2022, we had a really good year. The S&P 500 buy and hold investor was down 19.48%, and we were up 21.18%. This is one of the benefits of not being a buy and hold investor. You can take advantage and go short the market when the market presents that opportunity to you. Now, scrolling down, oops, get rid of that. Scrolling down to 2023. In 2023, we didn't do as well. In 2023, the buy and hold investor, they were up 24%, and our model portfolio was up 14%. We didn't lose money, but we were short by 10%. Don't like to be short. I like to be the whole goal is to try to beat the returns of the S&P 500 buy and hold investor every single year. So that was a little bit of a disappointment, but that did happen in 2023. Scrolling down now to 2024, you already know the results, folks. I've been spewing it already on this video. We were up 37.29%, buy and hold 23.30, and here is every single one of the trades for calendar year 2024 for you to review. Okay, so that's going to take you to the trades tab. I showed you the pricing plan. Let's hit the more tab. You have another contact us. You have a documents tab. Now, this is an Excel spreadsheet that I do use, And in this Excel spreadsheet, it's how I basically monitor all my trades. So when you go over to the trades tab, this information right here, where I kind of document all my information. If you want that same Excel spreadsheet, you can go and get that yourself here in the Documents tab. It's a free document that I'm just giving to you guys. And of course, we have my disclaimer page as well. So let's go back to the home page. Now, if and when you do become a subscriber, you're going to click on this here, and it will give you access to the members trade page. So there'll be a process for you to go through. I have to grant you access, because right now I have it, but if you guys click on this from home, because you have not been granted access, you're not going to see this page here. This is only for paid subscribers. Okay, so that's basically enough about the Conservative ETF website. If you have any questions about the website, you can always come over here to the home page, scroll down to contact us, and you can always send me an email. Now, one thing that I want to show you on the members trade page, I want to show you how much portfolio cash we're starting with. Now, for the SPY portfolio, we're going to start off with 130,000. That's going to give us enough money to do 200 shares of SPY plus 10% of cash in case we want to start playing around with some options. When we scroll down and we look at QQQ, we're going to start that off with $115,000. Scrolling down here for IWM, because the price of shares for one share of IWM is almost half the price of SPY, for this portfolio, we can start that one off with $50,000. I do expect the IWM portfolio to be extremely volatile and tricky to trade. So we'll see, because this one it just makes quick transitions. The strategy that I plan on implementing here is going to be better suited for portfolios, or indexes, I should say, that have a little bit longer duration in the trend. Quick moving trends are going to be very difficult, because it's difficult to call the bottoms and tops. You need to see those bottoms and tops in place in order for you to place your trades. So when you have a portfolio like IWM, that's going to be extremely difficult to get a good return and to beat that market, because it's going to be very difficult to call the tops and bottoms on that. And by the time you do call it, half the move is already evaporated for you to get in. So you're getting in where half the move has already taken place. So that's going to be more challenging. I do expect to have good returns in the SPY and the QQQ portfolios. Hopefully, we're going to do really well in the small account portfolio as well, but we shall see. Every new trading year presents new opportunities. So I hope you guys stick with me. This here is an old market summation that I generated on December 28th, 2024. So it's not that old, but it's also not the end of the year. So this was my market summation on my last video. Normally, I'm going to give you guys one video. I produce it over the weekend and then upload that over the weekend. So that's how I do that. So, and on that, I'm going to give you my closing thoughts about the market, give you the color strength signal that you're already going to see that at the beginning of the video, and just kind of go over some stuff. Now, and just like I say in the regular monthly videos, the market is an 800-pound gorilla. So even though I'm going to say what I think the market is going to do, let's go over and review last week's information. So December 28th, 2024, the market summation, according to me, Ken Cogliano, Senior Market Analyst for your friendly host, Conservative ETF Investor. This market is deteriorating, as noted by the red on the strength signal. This is the information I gave last week. We already know it's deteriorating. I don't believe we have a good risk to reward ratio for going long, and that was a good call at that time. By the way, even though I make these comments, I can always be wrong. I always keep that in the back of my mind. I'm just giving you what I feel is how the odds favor the trading, okay? I am not so sure that I want to go short this market either. We are in cash for now, and I would like to see 2 more candles to decide the next steps. Well, those 2 candles already came out. That was Monday's trading and Tuesday's trading. I didn't see a buying opportunity, and I don't see a shorting opportunity. As a matter of fact, I expect we're going to find support soon. I would be surprised if we did not find support soon. So now I'm going to be looking for a buying opportunity to buy and start our model portfolios. We're going to be starting our model portfolios in 2025 with a clean slate, zero gains. So with those 0 gains, then we're going to determine how we're going to trade for the entire calendar year. And I hope you guys stick with me, because wouldn't it be great to make some really good cash flow next year? So that's the whole goal that we're trying to do here. All right, guys, that is going to conclude this wrap-up video for 2024. I hope you got some valuable information out of this video. I do want you guys to stick with me for all of calendar year 2025 and see how we trade our portfolios in 2025. If you have not done so already, I want you to smash that like button down, subscribe to my channel, and ring that bell. Thank you and wish you good trading.